Good evening. This is Nitin Baijal from Deloitte India. Uh, I'm expected to speak in terms of what are the changes that are expected on the personal tax front in the upcoming budget, which is just about a few weeks away. Actually, about 9 to 10 days away from where we see what the finance minister is carrying in that brown box, and what are the expectations which the common man has in terms of taxes, in terms of deductions, in terms of benefits. I guess uh, in terms of personal tax front, the first important point that hits my mind is particularly on the tax rates, which haven't changed for a fairly long time. 2017-18 was the last when we saw a change happening in terms of the tax slab rates and the percentages of tax. Uh, the next change that technically happened was in 2020, which brought about a new regime into practice, which is a comparison between the old tax regime and the new tax regime. And this new tax regime hit us in 2020. While the government has intentionally tried to create a new regime, make it very simple in terms of the taxpayers, but unfortunately, data is not supporting that. And while we speak with clients and we speak with people, we understand that the old regime still continues to be appreciated and imbibed by the people in terms of the various benefits and deductions that are available. So, to put that in a nutshell, in terms of the old regime and the new regime, old regime, all benefits, deductions, exemptions still continue to be available to the common man now. And of course, that hits their pocket much lesser as compared to the new regime. Now, while we say new regime and the old regime, another new regime, none of these exemptions and benefits are available, and therefore you have to just pick the new slab rates, the new percentages, apply them, and sort of forget about paying taxes. So forget about what the issue is and make the payment of taxes. With the old regime, the benefit is that the HRA exemptions, the ATC benefits, the ATD benefits, the ATTTA benefits, most of these benefits are still available, and hence a common man would still continue to apply them. The only difference is that, of course, it's a little more complex in terms of claiming that as part of your tax return. But given the overall benefit that's available under the old regime, people would still like to continue with that. Now, given that we still have this complexity under the old and the new regime, one factor that sort of comes very clearly to the mind is that how do we sort of pick this up and which regime should we go for? While you put simple maths together, you would see that if you are under the old regime or under the new regime, up to the income of 15 lakh rupees, and if your deductions are restricted or exemptions are restricted to about 2,50,000 rupees, you pick up any of these regimes, mostly the benefit will be the same. However, if you cross 15 lakh rupees and your exemptions, benefits, and exemptions deductions are higher than 2,50,000, then it is the old regime which is actually picked other people, and because that will have a lesser tax liability for the individual, and it will benefit them more. So therefore, they would like to go for the old regime. So therefore, what is my suggestion? I mean, suggestion would be that in order to for the government to really make this new regime, being picked up by people, is that they have to maybe change the tax slab rates or the tax rates to that extent. So what probably could be proposed is that under the old regime, the highest slab rate beyond which the taxability is about 30%, we could move from 10 to about 20 lakhs. And basically, the exemption limit, the highest exemption limit from 10 goes to 20 lakh rupees. In terms of the new regime, the slab that it has about 10 to 20 lakhs, that should be taxed at about 20%. And beyond 20 lakh, it should be taxed at about 25%. So this probably will make it more attractive. And why this is certainly more suggested is given that while we look at countries that are closer to India, if you look at a Malaysia, you look at a Singapore, look at a Hong Kong, the tax rates there are much, much lesser as compared to India. It's so surprising that the highest tax slab or the maximum marginal rate for a person who's, of course, drawing income about 5 crores or something has about 42%, which is fairly high. And with this corporate tax reduction or the corporate tax benefit tax rate being there for new companies at 25%. So there is a huge difference between about a 25% and 42%. So somewhere or the other, government should look at this aspect so that the pocket of the common man is taken care of, and it gives more purchasing power in their hands by reducing their tax liabilities and giving them various other exemptions and benefits. Why I'm stressing and emphasizing more on exemptions and benefits is because one of the populist deduction that's available in our country and that's been there for ages is Section 80C, which used to be called 88 in the past. And 80C is a benefit, of course, that's available only under the old regime and not under the new regime. But as I said, mostly people go for the old regime. So for a 80C benefit, it's important that we should increase that limit, which currently stands at a paltry number of 1,50,000. And this has not changed for the past 8 to 9 years. This certainly needs real tinkering from the government side, because if people have to get money in their hands, their liabilities has to go out. They need to invest into the market. They need to do more purchase of goods and services, impact the economy, increase the GDP. All these aspects are interlinked. So therefore, to increase the purchasing power, we really need that ATC and other benefits should be improved. So ATC from 1,50,000 should certainly go up to a number of about 2,50,000 rupees. So that's more in terms of ATC, which primarily takes into account most of the things like a PPF or a provident fund or a housing loan, ULIP, so on and so forth. The second point that I wanted to make in terms of reduction was more on ETD, which is a Mediclaim benefit, which currently stands at 25,000 rupees for a family. And in terms of if you've got senior citizen parents, then that number stands at about 50,000 rupees. Given the complications we've seen in the past few years, given COVID and then interrelated diseases of COVID, this has impacted a lot of families, and therefore for them to see that there is their medical benefit, the medical issues and other factors are taken care of. ATD benefit of Mediclaim should receive a boost. They should increase this number for a family in terms of moving the number from 25 to about 50,000, and for senior citizen parents to move from about 50,000 to about a lakh rupees. So these are a few suggestions more from a Mediclaim perspective. And yes, please bear in mind all these aspects are interlinked in terms of reducing tax liabilities of individuals and then helping them have more money in their hands, increasing their purchasing power. So ATC, ATD are two important thoughts I talked about. Third thing that I wanted to also touch on is in terms of ATTT. We still continue to see that there is a large proportion of people who still continue to sort of make investments in an FT. And under anybody who's not in a senior citizen category, under 80 TTA, which is the section available for deduction of interest, that is restricted to what 10,000 rupees for savings. We should, or my suggestion would be to sort of, the government to look at moving this interest number from 10 to about 50,000 rupees, and then including the FT also as part of this category. So this, yes, will receive huge amount of applause. Because this is saving banks and FDs are mostly there in most of the families. So this will receive appreciation and is an important tinkering that should be carried out. The other aspect that I wanted to talk about was on tuition fees, which we've seen that the tuition fees has been sort of going from one number to a fairly high number. And it's that proportion sort of just totally gone to a fairly high extent. We've seen that tuition fees has really hit the roof. And tuition fees is a number which is available as a deduction for two children, which you are paying for schools. It still continues to be clubbed along with ATC deduction. There should be a separate section that should be introduced, which would sort of help the people to claim further deductions and reduce their overall tax liabilities and not just keep it as part of ATC. One last thing that I wanted to touch on is that We've seen the world's change in the last 3 4 years totally, and post COVID, the lot of organizations still are preferring a work from home policy, not wholly, but yes, on a hybrid model. Given these kind of policies in place, government maybe can look at introducing a section which could touch on aspects related to what could be reimbursement or allowances that can be given to employees who work from home and are now not being in the office wholly and are partially available in the office and have created virtual offices at home. So if they could claim some kind of deductions and benefits by virtue of the fact that they're now working from home, and the employer could sort of reimburse to them or give an allowance. So all in all, tinkering with tax rates, improving on deductions, and maybe introducing some new aspects in terms of work from home will certainly give a boost to the common man. And this is a wish list which is there in the mind of a lot of people. So let's see. Everyone in terms of a common man is waiting with bated breath to see what happens in the budget in the next few days. And we are keeping our fingers crossed. This is the last budget before we see the general elections happening next year. So there is a lot of expectation still in the mind of the common man to see what the government is going to roll out. Look forward. All the best. Thank you.